daily trade strategy weekend, and Fed day today, so lots going on. Let's take a look at what we got going on. It is Wednesday, July 29th, 2026. And before we get going, we're going to satisfy the regulators by displaying the requisite disclaimers, uh, specifically NFA Compliance Rule 2-29C, subparagraph 1. You're all familiar with the risks of trading. Past performance not necessarily indicative of future results. All right, so we have to start each morning the same way with those disclaimers. All right, once we get past those, we're good. All right, so again, today is a special day with Fed. I did have a special write-up within the daily trade strategy last evening for today's Fed Day outlook from various angles. So if you want to read what we have there, certainly click on that link to the daily trade strategy, and you'll get a little insight into generally what is expected today. In terms of how PTG trades the Fed day, guess what? Nothing changes. Just because it's Fed day doesn't change how we approach price action, interpretation, and so forth. We're just acutely aware of the potential for some wonkiness, some wackiness in terms of how prices move, right? The sometimes illiquidity that can occur, particularly during a presser, okay, which I believe they do have today. Yes, they do, right? So there is a presser. Also, that's at 2:30 Eastern. All right, so let's take a look at that in terms of our price action. So as you can see here, again, I have both sides. I have the NQ. Some of you do trade NQ as well as the ES. Yes, it is a cycle day 3. All right, in terms of the ES price here, this is above the cycle day 1 low, 16 quarter. The NQ has been over the past couple of days oscillating around its cycle day 1 low at 27,939. Right. So again, not as strong. There has been some relative weakness in the NQ. So all that really needs to happen there sometime during today is for price to trade above that cycle day 1 low, which I'm pretty confident it will at some point. The ES has already secured the positive 3-day cycle, which currently stands at just under 93%. Okay, so still very, very strong. Technically, we did have a failed cycle, the previous cycle, because price did not recover the cycle day 1 low by cycle day 3. Although it did recover it the following day. Technically, though, that is still a failed cycle based upon the statistics. All right. So here in the overnight, as you can see, again, should not be surprising, but the price is pretty much just kind of oscillating back and forth. Let me zoom in on the on our other chart, which we use a little bit more frequently. Okay, and that would be this one here on the left-hand side. Okay, basically same chart with a little bit more detail. But basically we're in a range. All right, again, we've been in this, large range for several days. Nothing really has changed overall. What was interesting is yesterday, which was a cycle 2, okay, we had a number of tests early in the session to break that cycle day 1 low, which is here. right? They had a number of attempts here during the RTH, pre-RTH and RTH. Never it was able to break that cycle low, so that helps to secure, that low. And then of course we ended up getting the rally uh, all the way back up to, and again, we noted this in our room yesterday. Just as a quick review for those in the pit room, we the breakdown point. Okay, we refer to as the scene of the crime, SOC. All right, so their 85s was the scene of the crime. That's where you know the Globex low, opening low, was broken, and then yesterday returned back to that before stalling out and closing around 67. So pretty much kind of a round trip, right? When you get these hard breaks like this, okay, on a particular session, we typically get some consolidation. And if that consolidation does not break further, okay, now again, kind of notice the similarities. And again, there's a concept that I refer to quite often over the years is referred to as symmetry. And you may have heard of it yourself. But symmetry, as I learned to define it over the years, is similarities or likeness in swings, right? So directional swings. So there tends to be some similarities, right, in terms of time as well as magnitude. So what do I mean by that here in this case, right? So you'll see this prior decline, right? Fairly aggressive decline. Okay. And then what do you get? You kind of get kind of this zigzag type pattern and then all the way back up. What did it do here in this previous one? It retested what? Right? The scene of the crime, the breakdown. Okay. So what happens again recently? Right. So you get another decline, very similar. What did it do? Right? Came back up and what did it do? Right? Scene of the crime, the breakdown. Pay attention to that stuff because although it's not, I'm not necessarily in a predictive, mode, but you do want to see, well, how far has the market, ask a question, how far has the market moved in prior sessions? These are some of the fundamentals I think every trader should really be aware of. You don't just come in, sit at your desk and say, okay, let's see what happens today. Yes, we can do that to a degree because we don't know what's going to happen. But the
Please
fact is,
play that.
you want to be in preparation. You want to be looking back at how has the market traded. Okay, how far range wise has the market gone on any particular day or over a period of time? Are there any similarities to the price action that I can identify? Okay, these are some real basic questions that every trader should be asking when they're looking. And if you can't remember those questions, write some down. It's going to lead you to answers, right? It's going to lead you to perhaps ask an additional follow-up question. These are all very good practices, right? Many of you have heard of the concept of best practices. Okay, the best practice approach is you find a repetitive process, and whether you're analyzing something or executing something, whatever it is, you're looking for, there's many ways to get to where you want to go, right? All different directions. Everybody typically has a different path. Find whatever path what works for you. Find the best approach within that path, right? Find and ask the proper, zone in on specific questions that lead you to quality answers. Right. So again, what you're trying to do is you're trying to hone in on what's the best practice, what's the best approach for me to reach my goal, to formulate um, a view of what's happening. And the more you do that, again, it's called best practices, and there's several ways to get there. Just using a generic example, but when you focus on some best practices, and in fact, once you have a good set of practices to follow, the analysis time, the decision time shortens. And like, yeah, okay, so I can take a look at this chart here, at least for myself, and like, wow, there's some good symmetry there. Why? Because I'm familiar with the concept of symmetry. I've honed my skills on identifying symmetry over many years. Okay, maybe a new concept for some of you. That's fine. All right, so write it down. Hey, let's explore the idea of symmetry, similarity or likeness in swings. Are there any similarities? And what you'll find, and again, eh, what I have found, anyways, is that the market tends to be very symmetrical. You can call that the Fibonacci effect, and all that, whatever you want to, classify it as. But the bottom line is the market is very symmetrical. It looks chaotic on the very short term basis, but when you zoom out a little bit, you're going to see, wow, there's some similarities there of how the market reacts. Why? Because even though the algorithms are doing the bidding, for the traders, okay, the humans are still controlling it. Humans are programming it. So, anyways, all right. So that said, overnight our upside 95's target got fulfilled, which was up at the D level, and then we got the reversal down. Down here at the 40s, we've seen the 40s a number of times, 35s, 40s. All right, that reacted. So we're going to start the day, very neutral. Today for us, line in the sand is 74.50. It's been hovering around 50s, 45s pretty much all week. And again, the market just kind of moving up to, upper edges, lower edges, and so forth. Okay, what is our 3-day central pivot zone? It is 59, well, 57 through 62. 57 through 62. All right, I'll put that up here for you. Where is it here? Okay, 3D CPZ. There it is right here. Okay, that magenta area. So 57 through 62. Right. And again, the market's just been in a range. And so with the Fed day today, obviously with the presser, and all the new protocols that Warsh has put in on um, releasing information, there's no longer a dot plot. Okay, no longer forward guidance. Okay, so it's going to make for interesting activity going forward. And the market is just still in the process of adjusting to Warsh's his style, right? All right. uh, I'm not an expert in the Fed, so what I do is I stay in my lane, and we'll look for, at least initially, some two-sided trade action. And as we get closer to some of the trade opportunities, again, we'll be highlighting those. All right, let's have a good session. We got less than a minute to go for the RTH opening bell. And again, feel free to ask questions and participate. Again, my stance right at the opening anyway is usually I like to let the market show us something for the first 5 to 15 minutes. But right now, the opening lean Okay, again, opening lean right now obviously is lower. Again, we had a quick premium right on the opening there. That was auto X. So again, for those using our automated systems, we got a quick short premium there right out of the gate. And again, just stay in alignment with the current swing, whatever that is. Right? Guys, it's a simple approach. I'm not trying to pick a level that's this is going to hold or not, but just kind of stay in alignment. And honestly, it's very hard to go wrong. Check your ego at the door, throw it in the waste paper basket, and start fresh. Clean slate every day. Whatever you did yesterday, doesn't matter whether it was a positive day or not so much of a positive day, it's gone. It's history. Can't get it back. You can only learn from it and then move forward with it. Right. All right. In terms of our levels, again, be sure to read the daily trade strategy. But what I'll do here is for shorthand purposes, I'll post them. All right. So that's directly from our daily trade strategy. So in terms of the downside potential, again, these 40 45s have been a kind of a sticky area throughout the week. But if it breaks down through the 45s, again, I'll be looking, down deeper, 25s, 15s, perhaps even below 7,400. And then again, the upside has already been fulfilled, 75 through 95s. Those have already been fulfilled. And again, with the Fed day, of course, anything and everything will happen. For those looking for a sell opportunity on the bounce up towards the uh, 70 area, we'd be looking for a play there, 70, 70 and a half, give or take. If we get a bounce up there, that's in the upper edge of the profile. So if we get a rally back up there, I do expect pretty good rotation today. At least that's my expectation. Market doesn't care what I want, though. All right, and if you guys are doing anything yourself, again, feel free to post, right, what you guys are looking at, what levels you're honing, you're targeting, things like that. Again, it adds to the conversation. So right now, the bulls would need to, again, in terms of like bullish, bearish, bulls would need to clear through 65s, 68s. So what we like to do is kind of use this, what's called, we use our extending rectangle. We usually kind of frame out pivot highs, pivot lows, and that's where the last buyers bought up at those levels before the market reversed lower. So what means there then price would need to, or bulls would need to kind of push through those levels, right, to change kind of the dynamic. Any bounces up to those levels still are referenced as potential sell opportunities until the buyers can clear those levels. We call that simply clearing and converting to upper support. So bounces are still sellable until further notice. Disdain in my voice. All right. So again, staying to the short side lean. I don't see anything on anything significant on order flow. Look at something. 54. Okay, so All right, I think it's going to be one of those mornings where we're just going to sit and grind it out for a bit. We have 45s. Somewhat in a no man's land here at the moment. Kind of these right around this 50 line in the sand. This is where we are. Somewhat of a no man's land. How about anybody else? And what else? Does anybody else have anything around these levels to work with? Negativo. Yesterday, chop in the middle. Yeah, yeah. Pretty much yesterday morning, right? We had this hold. That was the rhythm. We were just chopping around in the middle. In the middle. Oh, if you didn't get a chance, right? Be sure to watch yesterday's video for a review. We talked about non-trend days, and we also spoke of being able to identify or kind of handicap for a directional move coming outside of a range. Okay, and and again, it's something that I had learned years back. While I was, market maker, market making days. How to identify the likelihood of a directional move. So here's the link for everybody to take a quick look at, or at your leisure. Don't do it now, right? But the live streams that we produce, and this was yesterday's. So there's should be some good footage in there of a discussion on. Actually, we were discussing it in real time, and lo and behold, the market broke out, and we had good trade opportunity to the long side. So if you're interested in learning a little bit about kind of being able to handicap the directional move out of a range, well-defined range, has to be a well-defined range, which it was yesterday. Check that out in terms of yesterday's live stream. All right, today's line in the sand, folks. Okay, 74.50. Where are we? 74.50 plus or minus 5. So this has been kind of the fulcrum point. Yeah, please make sure you like the video. Yeah, we had fun doing that the other day when we had difficulties with the trade chat. We went to our alternate YouTube channel, and so we were saying, "Come on, guys, give us a like, give us another like." We had a good time with that. Unfortunately, you can't give likes on the trade chat here. It doesn't register. But on YouTube, the algorithm picks that stuff up. Yeah, those are that link is just all to the kind of the historical live streams, that we have. I mean, that's the database of what we've done. Um, Not every day is a gemstone, but there is some good stuff in there. Always live, never Memorex. All right, 50s are holding, 45s holding. Again, we're looking for a move. If that price can get, clear above those 65s, all right, with a shift, that would be a positive development for the bulls. But again, keep it what look what's happening here, right? Again, this is kind of building uh, this area here. You can see it in the profile, kind of the chunkiness, right, in that area. So the high volume node and zone. So this is, again, right in here, you can see this part of the profile, right? So this is where everybody can do business at the moment. There's balanced activity, right? Those that want to sell find ample buyers. Those that want to buy, obviously, are finding ample sellers for their demand, and the sellers are finding ample demand for their supply. Okay, so and vice versa. So, until that kind of balanced equation shifts, where would it potentially shift? Again, above 65s, or again below 45s, 40s, 45s. Right. So, you know, what's one of the first concepts you learn in economics? Supply and demand and equilibrium, right? So, out of all the reasons that people like to put on why prices did this or why prices did that, right? It still all comes down to the balance of supply and demand. The reasons behind that supply or demand are, incalculable. So why to try to figure out, the reason that, oh, yeah, you could determine a reason why somebody did something individually, but in a collective environment like what we're trading, those type of reasons are totally irrelevant. So supply and demand. It's funny because years back, while we're waiting for a trade here, years back, um, people would ask me, why did the market go up? Or why did the market go down? And it seems kind of, you know, cheeky, but I would say more buyers than sellers, or more sellers than buyers. And the person that asking the question, their face would just be totally perplexed. Huh? Yeah, there's more buyers than sellers, right? There were more buyers than there was supply. There was more demand than there was supply for that particular day, or vice versa. And again, they're perplexed because they really are looking for a reason, you know. And again, I said, well, if you're looking for a reason, state whatever you want to say as a reason that satisfies you, right? So yeah, there you go. Thanks, Renee. All right. Again, Renee is our daily producer here. So thanks to Renee for all the hard work that he's been doing on the Pitbull Trading live stream. So when you see Renee's name, he's the man. He's the man behind the curtain, as they say, right? But you want to pay attention. in this case, to the man behind the curtain. So yeah, don't forget the Pitbull Traders YouTube channel. All right, lots of good stuff there. Again, you can always go back and review all the various commentators, presenters. There's really we're building a library of just, I mean, an amazing library of talent and viewpoints, opinions, analysis, certainly educational. Everything. Everything in there. So again, I know it can be a little bit daunting to go back and review a live stream or something. But here's what you want to do. If something hits you with any of the presenters in any of the live streams, okay, make a note of it. Just jot it down, time, date, then go back and say, okay, I'm going to go back to this time, date, watch that review, and you know, learn from it. Of course, all those YouTube things you can speed up. If there's a specific time within the presentation, and that's important. So if you're going to go back and review something, make sure you note the time, because then you can just speed right up to it, and you don't have to sit there through the entire presentation. All right, again, we've been still staying on the short side of the field here. I see no reason to go long. Dominant side is the sell side, as we've been saying. So if you're not in a short at all, fine, but no reason to be in a long. And again, that's one of the key things that we want to always focus on, is staying on the correct side, right, of the dominant force. That's been my premise since day one. So many people try to pick a level and, oh, I'm going to go long here because it's a level. That's great, it's a level. But if it doesn't show, the strength that you need to see, then it's not really a level. It's not an important level, anyways. All right. Well, again, we're looking for 25s on the short side as a level. Speaking of, right? Yep. 74.25 is on deck. One of our initial objectives, right, on acceptance below the 50s, right? So we got struggled at 50s to gain any traction to the upside. When they can't gain enough traction, okay, to the upside, then what do? Let's go smack it. Yeah, Philly D asks, hey, David, how long are you? How long you at this good morning? This right? No, I'm not long at all. Oh, how long you? Oh, okay. I misread that. Okay, so how long you at this game? Trading wise in this business? 43, 44 years. Wait a minute. I don't know the acronyms here. What's this? How long you at this game? What's MNG? Spell it out for me, Philly D. Oh, it's an Italian. Ah, it's an Italian expression. Okay, I'm not familiar with that one. All right, so 25s again is a target If short, it is not necessarily a long. Okay, what we would want to see is some response and a hold against a certain level before we decide we want to go long against that level. Right now, it's just a short target, objective to the downside. I think one of Manny's levels got cut through, right, Manny? 32, 32, 37. So that got cut through. So no real response there. All right, coming down toward 25s. Again, if you're short, that would be an area to at least take some in. Just 25 is just one of the levels that I identified from the past sessions. Okay, you want to know all the inside baseball? It's just looking at all the activity from the past several days. All right. So remember, all our levels, all right, is plus minus 5 points. So I'm always doing zones, right? Yeah, I shook up the magic 8 ball last night while I was writing the daily trade strategy. No, it's just really just kind of you can see all the responsiveness in and around the 25s, plus or minus around the 25s over here. It's not magic, guys, right? It clearly is not. I mean, I'm not looking like even here. If we go a little bit further backwards, let me just open up the chart a little bit further so people can see it better, right? Again, all the various levels that I'm selecting, it all comes from past activity, right? So you got, gonna you get a low over here, kind of carry that forward, right? You look at the kind of complement of lows around here, right? Again, carry that forward, right? And it brings it to around, 23s, 25s. So again, I say, okay, 25s plus or minus five. Again, it's not rocket science, right? It's just looking at what happened in previous sessions, right? And again, giving myself that, plus or minus five buffer zone, right? Allows, for some, flexibility. And again, the market's just not going to stop on a dime, at a particular level. Sometimes it does, but most times it won't. All right. And then we go from 25s, okay, down to 15s. Well, that's basically the cycle day one low, right? At 16s, we got a low over here. So then we go, 25s here, 15s here, and then of course, we can identify a D level, which is at 775. So I'm gonna go 7405, right? Remember, it's plus or minus, so it's within that zone. That makes sense, guys? Not rocket science. You can do this stuff too, right? As a matter of fact, I highly suggest many of you to try to do this for yourselves, right? And again, it's not about being super accurate. It's just about framing out the potential for markets to move to a particular area. Okay. And that's why, all my levels and things that I'm highlighting, I don't necessarily use them as pinpoint, I got to buy them there or sell them there. Rather, the market has reached an objective. What does it want to do now? What is it showing me in that area? Okay, it reached that objective. So a short from earlier down to 25-ish plus or minus, that's objective has been fulfilled all the way down to 2175. But again, 2175, how many contracts are trading there, right? What, three, four? I don't know. So, so we're at the low end of the most recent range. What has occurred in the past, again, not saying that will happen today, same way, but what has happened in the past? Where did price consolidate and chop around yesterday for, a period of time? All right. Well, go back to your 5-minute chart. Again, look, we spent a lot of time in this area yesterday, right? So it makes sense to select the price point within that zone as a target. That's the rationale. I'm just looking back at what happened at previous levels. I'm not using Fibonacci measurements. I'm not using any mathematical formula when I do this. I'm just looking at, well, where did price occur? What was happening in the area? How long did it stay there? What type of volume did it build? Okay. Ultimately, it's a very easy approach. I mean, I'm not trying to, you know, I'm not doing any calculus in any way. It's just visual and just asking the question, well, what happened in certain areas? You say, okay, well, then it said, well, if price breaks down below a particular, number, in this case, 50s, where could it go? Well, it probably goes down back to an area where there was a lot of activity, right? That makes sense. An area or a zone of or prior acceptance. That's how I come up with levels and zones. That's how I was taught to, and it serves me well. And I'm not trying to be accurate like some folks out there on the Twitter sphere. You know, you know who they are. I'm not trying to be, you know, that. I'm trying to identify zones so we can, be flexible with our decision making and analysis. So now we're back down to this area again, 25s, 30s, give or take. Again, essentially the same zone area that price was trading heavily yesterday. So now the question becomes, right, you know, going forward now, we're retesting this area. There was a lot of activity in this area. Are the buyers interested in buying more here, or does the that equilibrium equation, supply demand, change? Okay, so far we've kept everybody on the right side. Again, whether you've took a trade or not, again that's your choice. But again, my goal is to make sure everybody is on the correct side, and in many cases we'll let our auto X's and things do our lots of our trading for us when it comes to that. Let's see, what else do we have down here? Um, yeah, so 25s. Of course, we'll have the 15s if we go retest the cycle day one low. It is a positive 3-day cycle now, so pretty much anything can go. We call that the wild card. All right, so getting a nice little. So again, if you were short coming in down into this area, like I said, you know, response was to at least tighten up stops or take something off, manage that position. All right. All right. So now we got again still playing to the short side and staying there. A little bit of a bounce, but not really getting a reversal recovery. So short side still remains dominant. Yeah, interesting because the past Fed, many of the past Fed uh, morning trades have had the lean to the upside. Now, of course, with the new Fed chair, uh, that may change. It seems as though it seems as though they're already changing in terms of the lean, right? Typically now today's lean so far is to the downside. We don't got Jay Powell in there anymore, so market's not really. Market tells us by its actions. All right, so back down to the 25 target level. Again, next is down to retest the cycle day one low, prior low area down into the 15s. Pretty confident that's going to get tagged. All right, so now a little bit of balance in here. Again, down into those. Let's see, what's our framework here? 40s, 20s. So our current sandbox we can use as 40s, 20s. Sandbox is just what it sounds like, the playground, the range. But right now, again, to continue the lean still to the sell side. So, all right, coming into our 15 area, tagging the cycle day one low, prior low. There you go. 15's 15's fulfilled. Anybody trading alongside? Should not be. If you're listening to and paying attention to our script, should not be on the long. CD3 going in the wrong direction. Well, it already fulfilled the 3-day cycle target. Excuse me, the statistic. So by trading above, staying above the cycle day one low during RTH. So that's been fulfilled. But again, keep in mind, yeah, but even during the RTH, but keep in mind, okay, once that occurs, all right, it's a wild card for cycle day 3. So again, remember, many of the declines, right, happen on cycle day 3, heading into the next cycle. All right, D level coming up, folks, for you guys trading the D level. All right, and again, coming down to our fives. I think it tagged the 5, didn't it? 5 handle. No, 6. 6. All right. Yeah, I measure it from the Globex. Yeah. Six on the low. Give us a 5 print. All right. Anyways, 7405 plus or minus 5. So we're essentially got our targets. Now, again, if you entered on the D level long, your goal is first recovery of the prior low. Okay, so again, for those that are unfamiliar with the D level money box areas, here it is right here on our charts. Right, the D level, that yellow zone there, line. Okay, so This is a long from the D level, and again, looking for a recovery back above the prior low. One of our trade strategies. I think Manny has what, 7402 to 05s, Manny, on a prolong. So that matches up with what we have. Very nice. And again, the reclaim of the 17s prior low. All right, there's the recovery of the prior low. You know, D-level Dan got that one, right? Standard play for D-level Dan. Very nice, Dan. Well played. All right, so the D-level money box play right now has been at least officially fulfilled in terms of getting back to the prior low, first target, take profit. Let's see if there's now a recovery back above the prior low and if the market can shift, right? Shifty shift. All right, so all the lower targets have been fulfilled on the bearish slate. Again, nothing has changed in terms of the direction, so we will still continue to look for bounces to sell, and if we get deeper moves lower, right, potentially down towards the 7,400 now, down to 73.95-ish zone. Okay, that may be now another opportunity for us to take a probe long for a bounce back up. Again, we're back, we're getting into areas that we would, it's not necessarily counter trend trading. We're looking for, these responses from some key lower areas that have responded and been trafficked in the past, right? But again, if your primary uh, plan calls for staying, 100% in alignment and not playing the D-level money box, then don't play the D-level money box. Okay. Again, I'm describing all various opportunities for the group as a whole. Right? It's not individual advice, but these are all different parts of our methodology and levels that we use for, trades. And again, just make sure it's part of your particular plan, and then trade it accordingly. All right. Again, the core lean remains down. Nothing has changed. All right. And now we're coming into money box level 1, MB1 as we call it. All right. So if you want to play MB1, if it's part of your plan, that's the level where you would look to probe whatever you need to. The lean is still down. So again, I'd love to be able to offer advice in terms of what to do, but as an educator, I cannot. Sometimes the D level works on the second or third hit. Yeah. Again, momentum is strong. Now you get the money box. So what you do is you play the money box one, MB1, right? So money box level one, right? So MB1 over here. Again, you play it the same way, right? Again, your choice of how to entry, but the entry then you're looking for D level for uh, you know, take profit. Okay, looking to get back to that D level. And then if it can continue back on higher, even better. Okay. Right. But my direction this morning has remained steadfast to the short side, to the sell side. Yeah, there you go, everyone. Okay, so again, MB1 back to the D level, right? Steve 9, everybody see that, right? MB1, again, as I outlined, back to the D level for take profit, right? Everybody see that in the pit room, right? Again, this is what our folks are doing here in the PTG room, one of our setups, one of our structures. Okay, and again, that's why I said this is not necessarily counter trend trading. We're looking at specific levels, areas, and there's quite a bit of an area there between 7,400 and 76 or 73.96. Got a number of different things there going. We got a projected buy day one low. We got the money box MB1, and we also have a violation level there as well. Okay, so again, these are, this was the long in here I posted, and then take profit up here at the D level. All right, now if markets can go further, again, that would be take profit 2 up at the prior low. Okay, again, that's how our folks do it in the PTG community. For those over in the pit that are looking and monitoring, we have audio over in the pit. I know we do over in the PTG. Make sure everybody still hears. Okay, the initial balance is complete. This is the first hourly high low, which typically marks a pretty good, we got a decent range here for the first hour high low. And generally we get some sort of an equilibrium move, which means a reversal back up a bit. But now if prices break below these current lows and cannot recover, then there's a pretty good, the odds then begin to favor even a deeper downside. But what the markets should be looking for at this stage, all right, is some sort of bounce recovery to some degree, anyways. Hit room still have audio? Okay, thanks, Renee. Okay, super. Just want to make sure. Just want to make sure. All right, so again, next second target here coming off that MB1. Again, that means money box one level is the prior low, back up to the 17s. Yes, Miss Danny with an I is presenting today at noon. Stay with us. She will be on at noon. I will be cutting off here sharply at 11:15, since I have a meeting shortly thereafter. So for another 40 minutes or so, you have me. Use me and abuse me. Guys, if you have any questions, comments about anything we've done, shown, again, your opportunity to ask questions. Again, if you're following the script, all right. The only couple longs we've taken, all right, opportunities was one off the money, one off the D level back to prior low, and one off the money box one, which brings us back to the D level. So D level to the prior low, and then second long money box, first level money box back to D level. Okay, those are the kind of core plays. Um, yeah, I find that the opening ranges are very important. Clearly, okay. So we actually have. Let me just bring this into view for you, Philly D. Let me just bring this so everybody can see it. Okay. Now this particular chart that I have is our opening range strategy. Okay, and we do have an execution capabilities for this strategy. Now we use for the opening range, we use a 5 minute, right, high low, and then we trigger in on this case we triggered into the short side with the early weakness. Okay, after the first 5 minute high lows established, you can see it didn't trigger for 15, 20, about 20, 25 minutes into the day, and then it triggered short. So how significant, the important do I view the opening range? The opening range has always been viewed, my view is as the initial kind of sentiment marker for the day. So years back when I was a market maker back in the day, okay, we had to execute, the opening range orders as well as the market on close orders. And so what we found was, the opening range tends to be kind of helps mark the kind of the early sentiment. All right. And so in this case, all right, you can see here that, the first 5 minute bar was kind of a doji bar. Okay, so set the high low, and then now the subsequent red bars there on the 5 minute again kind of gave us the clue early that there's a potential for a deeper downside move developing. Remember, all this stuff is in development, right? So whether we're looking at our execution charts as we typically do, I have this chart on the side so I can clearly view this. But the execution then would be a break of the opening low. So some people also use the 15-minute. Some people actually use, and you probably know who they are, and I won't mention anybody's name in particular. 30 seconds, 1 minute, okay. But there's a variety of people that use different opening ranges. Okay, so 30-second, 1 minute. Some people use a 3 minute. The reason why I use a 5 minute is that just kind of goes with more of the regulation. So when I was a market maker, just a quick backdrop of that. When I was market maker, the regulators gave us 5 minutes to execute all the opening orders that we had on our book. Unlike the market on close, where everybody gets the exact same price, it's not the same on the market on opens that are received orders that are received prior to the opening. We try to execute and pair them up as efficiently as we can, and probably even more so today with all the algorithms doing all the work. But back then, when it was a little bit more manual, we had to pair up, opening buys and sells, okay, and then at that point, but we have 5 minutes to execute all of them. Typically, we end up executing within the first minute, but we have 5 minutes to do it from a regulatory standpoint. Okay, so I've always kind of went with a 5 minute. Um, and that's just kind of how I do it. Right? Will you get long if price is below opening range or vice versa? Yeah. So what we typically will do again from a mechanical standpoint. So there's kind of two ways to view this. First, from a mechanical standpoint, okay, our algorithm will take the trade long or short, whichever one is violated first, whichever one is traded through first. Okay, so this morning it traded through, the low, it triggered there. Had it traded through the high first, it would have triggered there. Okay, so that's from a mechanical standpoint. Now, again, from a mechanical standpoint, there are performance results that go along with that, and but from a standpoint, if you look at the opening range in a more sentiment induced way, follow what I'm saying? Not a mechanical, but rather, you're looking at the 5 minute range here, and you're looking at the subsequent 5 minute bars within that range and saying, okay, what is that showing me? You know, what is that showing me? It's showing me that there's a fair amount of, selling pressure even before either side of the opening range triggered. Okay. So if I'm looking at these bars over here, it happens to be today, happens to be, you know, selling pressure today, I would be certainly not interested in taking a long. And I would be looked to, manually, right, discretionarily take a short. That makes sense. You're kind of looking at the 5 minute opening range as a kind of a key sentiment, first look of what the early traders want to do. Okay. Remember what happens in the morning. One of the key things that traders want to do in the morning, they want to position themselves as early as they can, get the edge, get the advantage, right? And so if the as it is today, if the selling is apparently strong before the opening range 5 minute high low is violated, this case would be the read would be we have selling pressure. I'm going to go with the break of the 5 minute low. Now, if you're using a 15 minute, okay, again, it would be the same type of read, okay, but now you're just a little bit longer time period in order to make that decision. Many people use the 15-minute opening range. Sure, nothing wrong with that. All right. Others really use 30 minutes, which I think is a little bit, you know, you can miss quite a bit of opportunity waiting 30 minutes, particularly if you're an intraday trader. So yes, I do view the opening range as a key element to to the trade. Kind of, if for nothing more as a sentiment gauge. Okay, so again, I hope that helps, and you can see that on our chart over here, our 5-minute chart. There's a lot going on in that chart here, but you can see it right in here. So here's the opening high, there's the opening low. Okay, and so a lot of times I'll have this sitting up here on the left, but I also see what's happening here on on our execution charts, right? So I can kind of, I believe, if I'm not mistaken, let me just check to see something. Yeah. So I actually have on here, there we go. See that blue line? That blue zone? Okay, there's our opening range on our execution charts. Okay. So now you take the read of those 5-minute bars. This is what's happening inside the opening range on those 5-minute bars. Okay. This area here is this area right in here. Okay. So whether you're looking at it from a 5-minute bar perspective or an execution chart as we use, 750 tick bar perspective, what am I seeing? I'm seeing the opening range, right? The opening range is overlaid. So what are we seeing here inside the 5-minute opening range, right? We're seeing weakness, right? So whether you're reading it from a 5-minute bar perspective, say, and you're recognizing and identifying there's weakness there, or you're looking at it from our execution chart basis, you're seeing weakness within that 5-minute opening range. So what do? Well, there's your 5-minute low. I'm going to take a short on a break of the 5-minute low. Or in this case, we got to move down and then we got a first pullback, okay, following a break of the 5-minute low. That makes sense, Billy D and everybody else? So that's a way we can use the 5-minute. I think 15 minutes, at least for me, it's a bit late, but that's only my perspective, right? But yes, bottom line is kind of a long explanation here to Philly's question, but bottom line is yes, it is very important. We monitor it, and it kind of just references any key level. This becomes a key level, so a break of that key level, right, then can trigger off a trade, okay, and or wait for that to happen and then look for kind of the first pullback following a break. Do you use the top of the opening range? So that would be the initial stop, right? So if you enter, so let's just say we took this as an entry, okay? This is your max stop, all right, up at the opposite high. That's the max stop, all right? But in reality, all right, if you're going to take say a short entry here on a break of the low, okay, stop loss is more likely at the midpoint of the opening range, okay? And if in a case such as today where, it just cratered pretty darn quickly, all right, I mean, you already had take profit opportunities on the way down fairly quickly today. Doesn't always happen that way, but today certainly. So if you were able to take some profit on the way down there, then your stop loss, I mean, could be right back, you know, to the low, your final stop loss, and just sit there with it. Again, it's easy to say, to do this in hindsight because we know what happened. But in terms of understanding the structure and some of the concepts of how we would trade an opening range, okay, and what we would be looking for trading an opening range, these are the kind of the ideas of the steps that we would look at. Okay. Now, of course, every day is going to be different, but the opening range, if you think about the opening range from a standpoint of looking at it from a sentiment perspective, not just a mechanical entry like like our auto trade assistant will do. There are times where the auto trade assistant will enter a trade and you really didn't. It's just counter to the sentiment that's unfolding, right? It just happened to pop through the opening. Like today, if it happened to pop through the opening high on any of these, bounces, it would have triggered long. The problem there is you would have gotten stopped out on the reversal. Now, what you could do in that case is what? Say we gotta move up here first and it triggered long. Okay, then this would be your stop loss, right? Maximum stop loss. And then if you got stopped out, what you could do is S&R, stop and reverse. So though you might have gotten stopped out, you're gonna stop and reverse. And that will get you in alignment. Okay. Right. Veteran move. Well, it's an alternative move, and again, you kind of work those things into your trade plan. All right. And again, not only just work them into your trade plan, you got to go back and test those out. How often does it stop and reverse? Right? Those type of things. I mean, if you're going to do something in a mechanical way, you need to have you need to have those metrics, and then you need to say, okay, I'm willing to accept you know the historical performance as I'm going to begin to use it going forward. Okay. Um, so it all depends if you lean towards more mechanical type trading, or do you want to use more conceptual trading that you can still back test, but now you're gonna use a bit more discretionary, semi discretionary decision making. Okay, so that would be, I'm going to use the opening range as a sentiment indicator, but I want to see the evidence of the market showing me what the lean is before I take that opening trade. Okay. So again, it's how you phrase it, it's how you view it. But yes, in terms of the opening, that's how we would one way we would play it. And then the second way, again, if we broke down and we didn't take that entry, we're looking for this. We're looking for the first pullback. And again, this gets us in alignment, right, with the break of the opening. This probably would have, I guess, this probably would have matched very closely in here with the 15-minute low. What was the 15-minute low, Phil? I don't have that off the top of my head, but probably would have been somewhere in here, anyways, which would have probably matched very closely to this first pullback. Okay. Again, all of this stuff you got to be, for those of you, I mean, it's easy to. All right, 28. Yeah, okay. So 28. So that would have been pretty much right in the middle here. Would have been the trigger. So that would have worked out. That would have been matching pretty closely to the first pullback, entry. Okay, if you again, if you're taking the short on the break of the 15 low, all right. Many ways how to do, this. This is just one kind of discussion of, how we would use an opening range play, and then incorporating the zone 5 minute high low into our execution charts and seeing what the execution charts are showing. What's great about Sierra chart, um, is that you can do these overlays. So I'm basically taking this 5 minute opening range from this chart over here to the left. I'm pulling it over and overlaying it onto my execution chart, which is really like it's one. I think it's the Sierra chart. I think it's one of the very best, if not the best, tool is to be able to take an indicator zone, whatever, from another chart and overlay it on a different chart. Right. Again, I don't need to see in this case. I don't really need to see an opening a 5 minute chart, do I? I don't need to watch an opening, 5 minute. If I have it on my chart right there, it's there right there. I just need one chart. Again, the chart can get busy, so you got to manage what you wanna display. But yeah, can play out really well. All right. Then of course you go to the bigger chart to see, targets and things like that you wanna. All right, what are we getting off the IB low, initial balance low here, right? What are they? I suggest that we'd probably get some sort of a bounce off the IB low. All right, initial balance low, first hourly low. Also, tagged the 95, 96s, which we also mentioned that would probably take a bounce from. So very nice. Yes, D level Dan, and looks like Libby as well grabbed the opening, the D level. So very nice, guys. Very nice indeed. All right. Well played. All right. Good question, Philly D. Let me know if anybody else has any. But that's how we do the 5 minute opening range. All right, all the way down to the 95s. Again, you guys trade the D-level money box very nicely today. All right, well played on that. And that's another thing here. Again, we can do a lot of things with this Sierra chart. So in terms of the D-level money box, we can actually overlay the D-level money box on here. I believe I have it. Let's see, where is it? Here it is. Okay, so there's our D-level money box. And if you take a look at this over on the far left, right, this is what the chart I've been referencing. But again, we can do this right from our execution chart. Okay, so this is your uh, let's see, sec. Okay, so here's the first trade. There's your first D level. Okay, and then so that was entry, and that was take profit up here at the prior low. Okay, so that was trade number one. Okay, trade number two, okay, was from what we referred to as MB1, money box one. Okay, and then target is D level. You also had another opportunity here for money box one again, right? Back up to D level, right? For take profit. All right. So again, initially we can view it off the big picture. So to get a quick reference of what the price is, that price zone. And then again, you can overlay it right on our execution charts. So you don't have to keep looking back at a bigger picture chart, right? And you're saying, okay, great. There's the D level. Boom. I want to buy that. Take profit. Boom. MB1. That's another level we want to buy. Take profit, right? So that's how D level money boxes are played, right? Um, the alternate though, here's the thing. All right, here's an alternate play. So if for those didn't, for those that want to stay strictly in alignment with the direction, once this bounces, this area could be an entry. Okay, for those looking to stay short. And the money box one was actually be a take profit. So it'd be kind of the opposite. All right, play. One, you're playing off the D level for a bounce back to the prior level, same as money box one. On this is staying in alignment with the direction. So waiting for the bounce, enter short, take profit back at the lower levels. Okay. And then again, it had a premium here, it would be the same thing, bounce up to the D level, got a premium. So this would be an entry short, all right, and then take profit down at money box. So again, both sides have opportunities, right? Today is a great example of both sides. Don't always get them, but today's a great example, right? To play, right? Now again, I know it's easy to show these in hindsight. I show them for educational purposes. I show them for to kind of create some, food for thought, right? Of hey, how can I play these? Because I'm always being asked, okay, I see the D level, I see the various signals. How do I play them? Well, I can't give you advice on how to play them. I can show you examples of ways of playing them, and that's what we do, right? And so you can take those ideas and say, okay, I'm a guy that likes to stay in alignment with the directional lean. And as I've been stating all morning for everybody, it's been to the short side, right? The only time that we have even discussed a long opportunity is when price reaches these key levels. Okay. So even then, so this outline shows you the opportunities to play along and where we would be looking to take profit from. And then if you were to stay on the short side play, again using those same structures, but now from the opposite side. Today was just a fantastic example for that. It's not always as clean as this, but we'll take it as an educational opportunity for sure. Um, E-mini Sniper asks, what kind of time frame is that execution chart? This particular is a 750 tick, okay, for the ES. Um, a lot of people use 1 minute. I'm not adverse to using a 1 minute. I just find a 750 tick, and people have asked me, well, why 750? Well, it's certainly not a Fibonacci number. Okay, so people always kind of gravitate towards Fibonacci numbers, to use, right? I don't use a fib number. I've just found personally, I've found a 750 to be matching quite well with signals and so forth that the ES generates for our methodology, our trade plan, um, in our setups. Okay, um, yeah, it's just something that I've always used. I've gone up to a 1500 tick chart, double that, which works pretty well as well. It's a little bit slower. Obviously when you go up in size, it slows things down a bit. But 750 is a very good complement between not too noisy, and it just happens to develop very good structural patterns that we use. Okay. All right. Does that help, E-mini? Yeah. It's just it's just what I like to use. But certainly, there are many other people actually like some like range charts. Some people like range charts. Some people like what is them the Hakanashi charts. Again, there's a flavor for everyone. Uh, the two thick lines. Uh, this is an 89 EMA, and that's a 34 EMA. You can match you can create a chart like this on yours. I mean, the moving averages are universal. You know, the premiums and discounts, that's all proprietary stuff. This is a CCI, but it's my proprietary version. Okay, so that's all part of our toolbox. But if you wanted to kind of match up like a 750 tick and put an 89 EMA and a 34 EMA, yeah, go right ahead. I mean, I'm not. Here's the thing. I'm not somebody here that's gonna like. I'll show you and tell you as much as I can. If it's not a proprietary, you know, um, information, then I'll tell you what we're doing, how we're doing things, right? What I have found, I can give anybody the keys to the kingdom, as it's called, right? I'm giving you the keys to the kingdom. I have found in my experience for many, many years that I could tell people exactly what to do and how to do it, and in most cases, they won't. And then they're gonna slide back, and they're gonna do exactly what they've been comfortable doing, you know, to date. And People just have a difficulty time making changes. It takes a long time to make a change, you know. Uh, faster fiend. Excellent session. Thank you very much. I appreciate that. Are these Sarah chart indicator available to buy? Yes. Okay. So again, I don't typically promote, anything that we have, uh, but you can explore the website. You can explore the website here. I'll just give you the main website link, and then you can explore there. And there's a number of different videos and things and so forth. So, and then there's an indicator page. Of course, there's a sign up page for various subscriptions if you're interested in any of those. So I don't really promote those. All right. Kind of in this forum, only if somebody asks. Right. So there you go. Since you asked. Okay. So if you do want to learn more about it, be happy to talk to anybody, and you have further questions. Again, what we're all trying to do here, in the room, right, is to, show you, what we do from each of our perspectives, right? You had Manny on Monday, we had Bo yesterday, uh, myself today. I believe, well, Danny will be coming on here at noon soon. So stick around for her episode. And of course, I believe Rich on Friday, and I'm not sure what the Thursday schedule is. But anyways, we're all here trying to offer you, different viewpoints of analysis of what we're doing, some of the trades that we're taking. The trades that we take and we show and we demonstrate are not designed. You should not be sitting there copy trading what we're doing if you have no idea what we're doing and what how that trade is being managed and so forth. Okay, I do certainly do not recommend that whatsoever. All right, use it for informational purposes. Say, hey, I like this. I like what David's doing, or I like what Bo or Manny's doing. I want to learn more about it. Right, so there's an avenue for that. Um, to learn more. Okay, so this forum here in the Pitbull, it's a free access. Okay, but again, it's very surface in terms of information. Try to give as much as we can, but again, you do realize that a lot of stuff that we're offering is free. And but if you want to learn deeper about any of our offerings and things that we do, reach out to the individual moderator for that presenter. Okay. Again, we're all trying to. This is just a collective community. We're just again, even in our own community over PTG and Mr. Top Step. Again, we're all trying to navigate these markets as effectively, as profitably as we can. Um, if something that I've said or something any of the other presenters, have said and presented, strikes a chord, go explore it. Right. I mean, again, we don't actively promote, you know, what we do. It's available for everybody. And that's, I'm speaking for all the presenters. It's available for everybody and it's your choice. "Hey, I want to go learn from this guy. I want to go learn from that guy, see what they're doing. All right, check it out. Check it out. All right. So yeah, so good. All right. Well, I'm going to be cutting out here in just a few minutes. So I appreciate the questions. I think we had some very, very good educational discussions today in how the market unfolded. A couple nice trades as well from different angles. So I appreciate all that. Again, stick around. Danny with an I is going to be coming on at noon, and I will obviously be available daily. So if anybody wants to reach out, to me, you can just find me. Just I'm monitoring the pit room every day. So if somebody wants to reach out, and have a discussion, be happy to. Just you know, send the chat out, and again, I'll respond. Right. All right. From this, as if anybody else doesn't have any questions, we'll complete our official session here, and have a good rest of your session, everyone.